Alright, this video is really to clarify my last post because there was a little bit of confusion. I know the Elliott wave theory can be complicated, so this is a little bit of a Elliott wave 101, if you will. I know I even kind of confused my good friend at EW End Patterns. He had posted a question as to, not knowing what my three different scenarios were all about. So anyway, basically a primer of the Elliott wave theory. It basically tracks human emotion and the forward progress of mankind in a larger, more philosophical sense. And that forward progress of mankind basically is 3 steps forward and 2 steps back. Okay. Uh, and constantly moving ahead and ahead as time progresses over the millennia. So the 3 steps forward would basically be the first wave, the third wave, and the fifth wave. Okay, those would be your 3 steps forward. Your 2 steps back would be the corrective A wave and the corrective C wave. Those are the 2 steps back. Now, and then of course, then you start again with the 3 steps forward. And this is all done in a fractal nature. Fractals occur in nature across the board. And so basically these structures, these 3 steps forward, comprise 5 waves. Okay, the 2 steps back, or be the wave 2 and the wave 4. Those are the 2 steps back, and then the first, the third, and the fifth are the 3 waves up. And the fractal sense comes into play, whereby each of these waves kind of subdivide either impulsively or correctively. Impulse means 5 wave advance, and correction means overlapping waves. Okay, so here I've taken a look at the entirety of the Bitcoin collective here from when it started trading. These are monthly bars. The first thing that I always do, and I've learned to do in order to get a grip on the wave structures of this nature, this 3 steps forward, 2 steps back business, is to look at the largest possible view that I can look at. Okay, and that's monthly bars over the duration of the entire data series from when it began. I mean, I've actually got data for the Dow Jones Industrials going back to 1896, and I'm able to look at the entire series from back then till present. Okay, that gives you the best encapsulation of what's happening. Now, in these fractals in the Elliott wave theory, there are several degrees of trend. Okay, and they keep getting larger and larger and larger, like the Mandelbrot theory. It just kind of almost goes into perpetuity almost, except that Elliott defined 9 specific degrees of trend. Okay, and they really get down to where you have to kind of look at intraday charts to see the smaller degrees of trend unfolding, but everything is unfolding in a fractal, if you will. So here, what I first did was I opened up this chart here of the monthly bars, and I assessed it. Now I had to look at it in log scale, because quite honestly, if I take the log scale off, I mean, this is what we have here. It's like you just can't decipher what's happening here, because everything is just totally unreadable in an arithmetic scale. I mean, this thing is going to need several decades of data in order for the linear arithmetic scale to be read in a proper way. So given that Bitcoin is very, very new, it's only traded since 2009, what have you, I really have to, in order to get a big picture, use the log scale here. So here you see this first, second, and third waves up, taking us into the 2013 period, is subdivided into 5 smaller waves at intermediate degree. So we've got wave 1, wave 2, wave 3, wave 4, and wave 5. And once the 5th wave is complete, it marks the 3rd wave of the next highest degree, which in this case, I'm assuming it's a primary degree 3rd wave terminal. Okay. And so from 2013 to basically 2015 in August, we've got this sideways kind of with a downside bias correction, okay, which is classic for a fourth wave decline, with a lot of overlapping non-impulsive waves, behaving in a corrective nature. And I have a fourth wave of primary degree ending there, right in August of 2015. Okay. And then from there, that marked a very significant bottom. That bottom happened to be, what's the low there? 198.12, $198.12. You can kind of see that up in the top bars here. It'll give you the open, high, low, and close price for whatever I scroll over a bar here. Okay, and this, if you look at the low price when I scroll over this bar, the low for that primary wave 4 down was 198.12. Okay. Thereafter, we were off to the races, and I've got a wave 1 at intermediate degree here, which is 1 degree smaller than the primary degree. Now, I could see it here even in the monthly bars. I can count 5 waves at minor degree in order to get to this first wave of intermediate degree. Minor is even smaller than intermediate. Okay, so from this 4 wave, we can go 1, 2, 3 sideways correction to 4, wave 5 of minor degree to the wave 1 of intermediate degree. Now this second wave is something of an anomaly. I mean, one might consider, you know, putting this second wave down here, okay, and that would be just fine as well too. I've got, this is a most bullish running correction to an extended fifth wave at primary degree. So, typically fifth waves do not extend like this. They just basically end in large part equal to their first wave. So whatever the height in terms of amplitude that took place in the very first wave oftentimes is replicated in the fifth wave, which would have probably ended somewhere up in the $2,700 range, and then wave 5 would have been done, and then we have an ABC correction, 3 wave, the 2 steps back to a second wave down. In a very, very bullish market, however, fifth waves extend. They extend again. Typically, third waves are the biggest, most powerful wave, especially in equities and the broad indices like the Dow and the S&P 500 and so forth. I'm having a glass of wine here, so excuse if you hear me taking a sip. That was one right there. Okay, so, but in a very, very bullish situation, be it in equities, and it has happened in equities, it has happened in the broad market indices, it has happened in stocks quite often, and it appears as though it's happening here, where the primary fifth wave advance is itself extending, okay, which is, really very bullish, and things get way out of hand with fifth wave extensions. And in fact, back in the early days, if you happen to purchase the book from Amazon and read through the entire Elliott wave theory, the Elliott wave principle book, you'll find that Elliott early on was under the assumption that fifth waves always extended. Okay. Robert Prechter, who later on became the next guru of Elliott wave, basically said that perhaps that was the case back in the 1930s, 40s, and 50s, or what have you. But as time went on, he found that it was more often such that the third wave extended and the fifth waves did not. But here, clearly, in terms of my assessment here of the primary degrees of trend working, we definitely have a fifth wave extension. So in the red here is the primary degree of trend. Now there's the cycle degree, which goes one step further, then there's super cycle, and then there's grand super cycle. Okay, so you could imagine the thought that went into these fractals and these various degrees of trend to take into account movements over thousands of years. Okay, so backtracking, I digress from that little excursion there, but just looking at this primary wave structure, wave 1 up, 2 down, wave 3 primary, wave 4 down primary. Now we've got 1, 2, 3, 4, and perhaps one more wave up to go for this intermediate fifth to complete the extended fifth wave, which would then mark the primary fifth and the cycle degree 1 wave. Okay, now this here is the most bullish scenario pretty much that I could think of. Okay, and you know, this takes the price up close to $70,000. All right, which is like totally out of this world. But there's also another very bearish possibility that this high here that occurred, now look up at the top here at the highs. Okay, this is the high price right here. So when I put my cursor over the top, this high price of 19,666, I'm currently having this marked as the preferred count of being a third wave at intermediate degree. Now we've had a sharp 60% decline since then, and I'm again under the preferred bullish scenario. I'm assuming that this wave down here is going to mark the end of wave 4 at intermediate degree, and then rocket ship back up to the wave 5 to end the entire primary and cycle bull market. Okay, that's the most bullish case scenario. Okay, over the intermediate term, which is basically over the next year or so. Okay, if that's the case, let's go into the assumption that that's the case, and that we are in the process of basing in a fourth wave down at intermediate degree, which would then require a massive fifth wave rally at intermediate degree, which basically would top off the entire primary and cycle degree first wave. We could have some more downside to go, obvious here, because what I've done is I've connected waves 1 and wave 3, and then I drew a parallel trend channel down below from the base of wave 2, which by the way is like a very bullish running correction, where like wave 2 is even almost higher than wave 1 and it doesn't go down. And that's extraordinarily bullish. Okay, that'll have some other important meaning too as I get on with this little Elliott Wave 101 primer. The bottom of that wave 2, by the way, was $891.33. Okay, you can check it up here at the low when I put my cursor over this, 891.33. Okay, so once that occurs in basic Elliott wave 3 steps forward, 2 steps back concept, okay, we would then see an answer to this primary fifth with 3 waves of primary degree in response, and those would be the 2 steps back. Waves A and waves C would be the 2 steps back. Of course, we have an intervening bullish move up to wave B. Okay, so that would then postulate that after reaching a high north of 66,000 in Bitcoin, we'd have a 5-wave clear decline down to the primary A wave, okay, which would likely occur and stop and gather support at the previous fourth of 1 lesser degree, okay, which is maybe around here in the $6,500 range, okay, and then we'd have a corrective upward 3-wave advance, another ABC at intermediate degree, which I didn't bother to label. This would be the small A, B in parentheses, C in parentheses, which would mark the larger B of the primary B wave advance. Okay, and then there'd be likely 5 waves down at intermediate degree, just like these 5 waves up, but only in reverse, to mark the end of the primary C wave down. Okay, and once the primary C wave down is completed, it would mark yet the larger degree of trend's second wave decline. Okay, so then you get wave 1, wave 2, and then wave 3 is going to be you're off to the races. Look, Wave three's got to go substantially higher than the 66,000 here. So, we're already up at the 190,000, 280,000 level over here, and it could even go way, way higher than that. Okay, in the third wave of cycle degree, which would require 5 waves of additional advance at the primary degree all over again, basically repeating the cycle all over again. It's repetitive fractals at varying degrees of trend. Okay, now, so are you guys following along with me on this? It's a little bit complicated, but it's pretty easy once you get the general gist of the puzzle and how it works, and it's just a matter of putting the pieces of the puzzle together. Okay, it really is that simple. Now, the reason why this 891.33 is so, important for numerous reasons is that when a fifth wave extends, the big decline that encompasses correcting that typically is the fourth degree of the wave at one lesser degree. So I mean, in theory, this low here of 198.12 would be the absolute low that this wave 2 can go, conforming to a very common retracement of Elliott wave theory, where the higher degree second wave down would coincide with the previous fourth wave at 1 degree less, which is the primary degree. Okay. However, he also took note, as did Robert Prechter as well, that when you have a fifth wave extension, that it's quite often that the second waves only decline to the second wave at 1 previous degree, okay, which would put this potential future decline, I'm looking at it here in the 2021 area, in the year of 2021, that this would be the target here, this 891.33. Okay, 2021 is a very critical year. I wrote an article. There's a lot about 2021 that's significant in terms of the stock market and so forth, in terms of Fibonacci years and the like. So, and I'm of the opinion that 2021 is either going to mark a real high for the stock market, or it's going to mark a real low. One way or the other, 2021, in my estimation, is going to be a very pivotal year. Either it's going to mark an extreme high, or it's going to mark an extreme low. That being said, let's move on. So before we get away from this big long-term monthly chart here, okay, we also have to recognize that our most bullish hopes that there's still yet another massive rally up to this intermediate fifth wave, we have to also recognize the possibility that it all may be done at this high here of 19,666. It could be all said and done right there. That, instead of another move to 66,000, this move toward 20,000 could be all of the fifth wave, and it could be all of the cycle degree wave. Okay, that could be it right there. Okay, in which case that's going to be bearish, perhaps up into the 2021 period. And maybe the ABC won't look like this unless it's expanded B wave that goes above the previous third wave high, which is possible. Okay, because you could have an expand. Typically the B waves don't go over the peak, but they can in certain instances, where it's called an expanded correction, whereby the actual head fake B wave, which is really a corrective wave, extends beyond the previous high, okay, and then crashes down, okay, to the C wave. That's happened before, numerous times throughout history. But if that doesn't happen, and if the top is in here, if the cycle and primary degree has already topped, as I've noted here, this is the alternate. These are the alternates. ALT stands for alternate, in case you really didn't figure that out already. So this is the alternate of all of the fifth wave right here, and the alternate of the entirety of the cycle degree first wave up. If that's the case, the first A wave down is typically going to go to the fourth wave, where well, well, the fourth wave of one lesser degree, that would probably be somewhere, in this line, because this would be wave 4, this would be wave 5. And so the A wave would probably go deeper, the B wave would be more shallow, okay? But the C wave would still target like the 891.33 level, okay? For this cycle degree wave 2 prospect, okay? But that's not the preferred count. The preferred count is that we still have another giant move up, okay, still to go in 2018. But everything is subject to change based on the price action, okay? These are just interpretations based on past history. Okay, so you guys got that basic Elliott Wave 101, taking a look from the largest view possible, then breaking it down if you want to see what's happening on a more week-to-week, day-to-day basis. You have to, instead of use monthly bars, you go to weekly bars or daily bars or intraday bars. So that's what we're going to do next. Okay. So from here, we're going to move over and take a look at the daily chart. Okay. This is that peak here at the 19,666. You could look up at the high over here when I toggle over the price bars. 19,666, our preferred third wave. Now this I did do in arithmetic linear scale. Okay. So this is actually showing, I mean, each of these horizontal lines here are 1,000 points. Okay. 11,000, 12,000, 13, 14, 15, etc. Everything is equal. It's not on a ratio or a percentage ratio. This is what's happening in real time arithmetically. Okay. So I'm going to be making another video shortly as to some of these price patterns I've seen in the various price targets and the critical resistance and support levels that are there. But here we're still on the Elliott wave. Pattern. Now to clear up, this is the chart I basically used from my previous post, which at EW and patterns got a little confused by, because I proposed 3 potential outcomes. Potential outcome 1 was the most bullish, and I'll review that right now. I'll link to my previous post and you can pull it up and you could read each of the 3 scenarios and refer to this video for further clarity. Okay, so the most bullish scenario that I had listed on my previous post, again, was falling in line with what I just mentioned, that this price peak here just under 20,000 marked this intermediate 3-wave crest. Okay, again, we have this is bearishly alternate primary 5, bearishly it's alternate cycle degree wave 1, but we're not going to pay attention to that right now. We're looking at the most bullish possible scenario here, and that is that this is the 3rd wave of intermediate degree. Classic 5-wave overlapping decline here. 5 waves, A, B, C, D, and E. Okay, that's a huge 60% decline in those 5 waves right there, folks. Let me tell you, that's huge. It's a really huge decline. I mean, it doesn't look like much here, but that's 60% of the entire value that Bitcoin was near 20,000. It's like 60%. That's huge. Okay, it's a huge move down. The most bullish scenario would suggest that these 5 waves down here, okay, they're labeled in red right here, which is basically even a smaller degree, but they would be labeled as the blue waves here, which is, this is the minor degree of trend. Okay, and so assuming this A, B, C, D, E was the blue minor degree of trend, and it ended a few days ago, okay, at this low here of, let's see what the low was, 76.2525, and that ended the entire minor degree correction, that would imply that the intermediate degree wave 4 had actually based right here, and that from here on in it's smooth sailing up to north of 50,000. Okay, that's the most bullish scenario. That's not the scenario that is my preferred scenario, but that is the most bullish possible scenario. That this 5-wave overlapping falling wedge pattern here has marked the entirety of this intermediate degree wave 4 down. Okay, and if that's the case, we're going to get 5 waves up to minor wave 1, we're going to get 3 waves down to the minor wave 2, and then the minor wave 3 is just going to go ballistic. Okay, we're up at 24,000, 25,000. It's just going to go, it's going to go crazy. That's the most bullish scenario. In scenario number 2, the next most bullish scenario is actually the preferred count that I've got in here right now. And that is assuming that this decline here at this base here, at the 76.25.25 low, just mark the first leg down at the minor degree, the A wave, and that the 4 wave is going to take much more time to develop. And so, but even at that, we're short-term bullish in that if my preferred count ends up being correct, and this is the A wave at minor degree, we're going to get 3 waves up to minor degree B, and then we might get five waves down to the minor degree C, which would then mark all of the 4th wave down. Okay, maybe down in the $4,000 area or something like that, 3,500. All right, those are 2 still very bullish scenarios. Okay, so that's scenario 1 and scenario 2. Scenario 3 is the most bearish. Okay, and that's why I didn't have to change any of the labels here. But it's hard, like at EW and Pattern said, if you're not familiar with the labeling and the theory itself and the notations of what's an alternate label and what's a primary preferred label and so forth. It could get kind of confusing, so that's the reason for this video. So in the most bearish scenario, this intermediate 3 wave goes away, and basically this 3 becomes a 5. That becomes an intermediate 5, marking the 5th primary peak of the first wave at cycle degree. And as such, this first leg down here could be an intermediate A wave. Okay, that's the alternative intermediate A wave decline. This rise here could be the alternate intermediate B wave, and then a huge decline to intermediate C would then only mark the primary A wave. Going back to the long-term chart, that would only mark the primary A wave. Okay, so, and then we would rally again, and then so it's basically all downhill from here in the most bearish scenario. Granted, there might be some massive 1, 2, 3, 4, 5,000 point rallies along the way. Okay, getting everyone all excited again. But if it's over, it's over. Okay, if this bearish alternate comes to fruition, it's just simply over until, that is, the second wave has actually based at the cycle degree of trend, perhaps down in the $891 area. Okay, so that's basically it, and I hope that that cleared this up for you. And just to kind of show you a little bit here how crazy this is the linear chart. You can see how crazy I've connected wave 1 and wave 3 here. That's how I got this parallel trend channel, and I sucked it right up to the recent low. But you know, you look at this, and just look at something that's pretty amazing here. Look at this price action, and look at where the 0 is. 0 is right here. This is 0. Okay, this is 0. We're only this far from 0. Okay, that's like risk of ruin. Everything is entirely ruined. The whole market just blanks out then at that point. Okay, So I'm gonna add another video to this shortly. I hate this charting program. I really do. It just goes all over the place. You can never find where you were quite exactly before. I think I was right around there. Yeah, it just bothers me. But hey, listen, you got to get used to new things. All right, so in any case, you get an idea how massive this decline was by streaming back into the linear scale and seeing just how close to zero that we actually are. Uh, if this took another equal leg down to what's done here, it's down 60%. Another 60%, you're down to zero, basically. Well, not from this level, but then you're talking about being down 100%, and that means zero. Okay? That's crazy. Anyway, I'm going to end this here. So hopefully you guys got a little bit of a Elliott Wave 101 primer on my view from the long-term monthly view to the daily view from the top and daily bars, okay, and what can possibly happen hereafter. And I'm going to do another video shortly explaining some patterns and price targets and some trajectories and trigger lines that I'm going to share with you as well. So with that, I will say sayonara and see you at the next video.